So what happens when the price breaks and closes above a resistance level? Well, the price goes up, and that is exactly what happened here. If we were to take a long position when the price broke and closed above this resistance level, we can see that that trade would have been profitable. A few candles later, the same thing happened. This is a resistance level, and the price broke and closed above it. So taking this trade reveals that this position would have been profitable because the price did in fact go up afterwards. Now, here was another resistance level just a few candles later, and the price broke and closed above it. If we were to take a long trade here, well, this trade too would have been profitable. Ladies and gentlemen, this super accurate support and resistance indicator used to be a premium Lux Algo indicator in 2020, but they decided to make it free after some time. In this video, we're gonna go over what this indicator is and how we can use it to trade. Let's get into it. Now, to get started with this indicator, you want to go to TradingView and then open any trading security that you like in any time frame. For me, I'm going to be using the 15-minute time frame of XAU USD, which is the ticker symbol for gold. After that, you want to click on Indicators and type in Predictive Ranges, and you want to select this one by Lux Algo. Ladies and gentlemen, this is the all-powerful Predictive Ranges indicator, and I know you may be thinking,
but what exactly is it?
Well, it's a tool designed to predict future trading ranges in real time, providing us with critical insights into support and resistance levels as well as the trend direction. This indicator predicts future trading ranges and adjusts dynamically in real time. Its primary objectives are to highlight support and resistance levels, which can act as boundaries where the price may reverse, and number two, it can also be used to determine the trend direction. And we're gonna go over how this indicator can do that in a bit. But for now, let's take a look at what this indicator is made of. Now, as stated before, the purpose of this indicator is to predict future trading ranges. This is one of those trading ranges as indicated by this indicator. Up at the top, we have a resistance level, the whole red area. And then at the bottom, this green area represents the support level. And then in the middle, we have the central level, which represents an estimate of the price's central tendency. When using this indicator to trade, you just take a look at how the price is interacting with the support and resistance levels, and then you take your positions. If the price reaches a support level, it can either bounce off it and go upwards, or it can break below the level and continue going downwards. The same thing applies when the price reaches a resistance level. It can bounce right off it and go down, or it can break and close above it and go up. The interactions between the price and the central level can be used to detect the trend of the market. If we have multiple ranges like this, you can take a look at the central levels. If the central levels are positioned higher and higher relative to each other, like here, that would indicate that the trend of the market is bullish. Conversely, if the central levels are positioned lower and lower relative to each other, like here, that would indicate that the trend of the market is bearish. Now, in the settings of this indicator, you can see that we can change the length. This setting adjusts the ATR length used in the calculation. Higher numbers provide smoother and wider ranges, while lower numbers generate tighter and more sensitive ranges. Next, we have the factor. This controls the width of the ranges. Higher factors provide broader ranges suitable for longer-term analysis, reducing the likelihood of the price breaching these levels. Conversely, lower factors create narrower and narrower ranges, which are more appropriate for short-term trading strategies. Now, the time frame allows users to set a specific time frame for the indicator to work on. For example, you could analyze predictive ranges based on the daily time frame, while at the same time trading on the 1-hour time frame. Now, the source is the data source for calculations. For example, the close prices, the high prices, or the low prices. Now, the Style tab has several customizable options that we can toggle on or off. After you've made your changes, click OK. Now, using this indicator to trade can be broken down into two strategies. Number one, we can use it to identify pullbacks for trend continuation entries. And number two, we can also use it to identify breakout entries above and below the support and resistance levels. Let's begin with the first strategy. To identify a pullback, you first need to establish that the market is trending. But how are we going to identify the trends of the market, you may be thinking? Well, we just need to ensure that this central line keeps rising higher and higher with every new range. But in order to determine the pullbacks, we need to add an extra indicator. known as bullish bearish reversal bars, this one by Skyrexia. This indicator leverages the combination of candlestick reversal pattern and the Williams alligator indicator to help traders understand where there is a high probability of market reversals or corrections. It visualizes the bearish and bullish reversal bars with red and green dots, as can be seen here. This green dot indicates a bullish reversal, and this is a bearish reversal signal. Now, combining the two indicators into a single strategy is as simple as this. First of all, you identify a bullish trend that is going to be indicated by having the predictive ranges stacked up higher and higher relative to each other, like this, with the price heading upwards. This indicates that the trend of the market is bullish. Now, after we have the bullish trend, we want the price to come all the way down and enter or touch the green support level. Once we have that, we need the reversal indicator to indicate a bullish reversal right when the price is still inside the support level, like this. So basically, the price comes back down into the support level. And then to confirm that it will bounce off the level, we need to ensure that we have a bullish reversal signal to increase the probability of the price going up. Once we have this, we enter a long position. The stop loss can go right under the support level. The take profit is going to be somewhere in the middle of the upper resistance level. Letting the trade run. And as you can see, the trade was profitable. And of course, for a short position, we're going to do the opposite. Now, this was just one of the methods of trading with the predictive ranges indicator. But there is another way. For this second strategy, we need to remove the reversal indicator so we can add a trend indicator known as the Variable Index Dynamic Average, or the VIDIA indicator. This one by Big Beluga. This tool identifies bullish and bearish trends in the market, but most importantly, it also displays the buy and sell volumes within specific trends. It also includes a delta volume, which is a percentage value that represents the strength of the trend. I actually created a detailed video about this indicator some time back, and you can actually watch it on the channel. The link will also be in the description below. But how it works is as simple as this. For a bullish trend, which is indicated by a green trend cloud like this one, the delta volume is supposed to be positive, and not just positive, it should be at least 30%. That would indicate that whatever bullish trend we'll be trading in is strong enough to keep the price going up. Conversely, for a bearish trend, which is indicated by a red trend cloud like this one, we need the delta value to be negative, and not just any negative number. It should be at least minus 30% and increasing towards the negative side. So minus 30% is the minimum volume, but it can go to minus 40%, minus 100%, all the way to minus 200%. So here are the conditions for taking a long position. Condition number one, you want to ensure that the trend of the market is bullish. That is going to be indicated by having a green trend cloud from the VIDIA indicator. Once we have it, you want to locate the most recent predictive range, as indicated by the predictive ranges indicator. Right here, we can see that this is the most recent predictive range. Condition number three is we want to wait for the price to break and close above this resistance level. Here we can see that the price has just broken and closed above the resistance level, which means we now have to take a look at the delta volume and ensure it's at least 30% to indicate that the trend of the market is strong enough during this breakout. Right here we can see it's well above the 30% limit, which means all our conditions are met. So we take a long position. The stop loss can go at the most recent swing low, but if it's too far, you can just put it under the resistance level. The take profit can be set at 1.5 times the risk. Letting the trade run, and as you can see, ladies and gentlemen, the trade was profitable. Now, for a short position, we're gonna do the opposite. Condition number one, confirm the trend is bearish by having a red trend cloud from the VIDIA indicator. Condition number two, we need to identify the most recent predictive range. Right here, we can see that this is the most recent predicted range. Next, we need to wait for the price to break and close under the support level. Let the market play out. And here we can see the price just broke and closed under the support level. Now, during this breakout, we need to ensure that the delta volume is at least minus 30%, and this number should be increasing towards the negative. Right here we can see it's well under minus 30%, which means the trend is strong enough during this breakout, which means it's strong enough to push the price down. We take a short position here. The stop loss is gonna go right above the support level. The take profit is going to be set at 1.5 times the risk. letting the trade run, and it was profitable. Ladies and gentlemen, the predictive ranges indicator is a valuable tool for traders seeking to enhance their ability to anticipate market movements, identify critical support and resistance levels, and stay aligned with the prevailing trends. Go ahead and check it out on TradingView, and if you find a way to use it alongside your strategy, well, let us know in the comment section below. That's been it for this video. I really hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.